Hello, Trailblazers, and welcome to another episode of Entrepreneur Journey. And today, my guest is Henry Daas. Henry Daas is a serial entrepreneur, business coach, screenwriter, and self-described ordinary guy, and now a personal finance coach. He built his consulting business, Daas Knowledge, to help provide professional coaching for entrepreneurs and business owners of companies with top-line sales under $10 million. His debut book, FQ, Financial Intelligence, is the culmination of his 6 decades of financial knowledge and expertise. How are you today, Henry?
I'm doing great. How you doing, Doug?
I am doing
Happy Monday.
Yeah, happy Monday. I actually don't do many of these podcasts on Mondays. Usually it's in the middle of the week. So this is interesting for me. So awesome.
All right. I'm going to have to get revved up.
That's right. I've already had a couple cups of coffee, so I think I'm pretty good.
You and me both.
Good. So before we get started, I like to always get to know my guests a little bit better. So I have a few of those type of questions for you.
Sure.
Do you have any pets?
How many pets?
Yes.
I have Elvis, who you heard howling in the background. Yeah.
Nice.
He's let's see, December 4th, he will turn 6. He's a rescue dog that we got from a couple in Brooklyn, in Williamsburg, in Sunset Park. He was about 2 months old. Yeah, he's 80 pounds of bark and he runs around like a maniac.
Nice.
So we have 5 acres here up in Connecticut. So he's living large. He's happy.
Nice. So my next questions, now that I know that you live in Connecticut, because I thought you lived in New York, so I had some questions New York related.
You can give me New York questions. I lived there for 30 years.
Oh, okay. All right.
Mm-hmm.
So
Yeah.
What was your favorite thing about living in New York?
Just the vibe. Just I call it being alone in a crowd. I mean, I consider myself to be a closet extrovert. So I'm perfectly happy just being alone, doing my thing, writing, reading, whatever it might be. But you know, we're humans, we're social creatures. So in New York, you could turn it on and off. You know, I lived in Manhattan, I lived in Greenwich Village. You could turn it on and off whenever you wanted, and it was great.
Nice. So now it's kind of sports related. I don't know if you're a sports fan, but we'll do those kind of questions. Jets or Giants?
I'm a New York Giants season ticket holder, as a matter of fact. I have been for many years. It's a bye week as we're recording this. So every bye week, I write John Mara a letter, and he always writes me back. Sometimes he doesn't like what I say. He'll get right back in my face, which is interesting when you think, when was the last time the CEO of a $5 billion company answered one of your letters?
Right. Yeah. Wow.
Pretty interesting. And a lot of what I talk about is business related, right? Because there's a business lesson there. To buy Giants tickets, it's a $5,000 a seat in a personal seat license, right? I have 8 seats. Do the arithmetic on that. Those seats are worth about 30 cents on the dollar today. It's been been probably, from an investment standpoint, and I'm an investor and a trader, it's probably been the worst trade that I've ever done.
Wow.
So
nice.
Yeah. Anyway, you asked, I gave it to you.
Yeah. So let's go baseball now. Yankees or Mets?
You know, I'm a hybrid. Normally, Giants fans track to Yankees and Jets and Mets, but I'm a Mets fan because
nice.
I don't follow the DH league, and I sure hope that they don't go to universal DH. I grew up before. I remember when they instituted the DH in 1973, Ron Bloomberg for the Yankees. I was 14 years old. So the baseball I knew, pitchers hit. You could always tell when you got to the bottom of the order, because just by the way the guy swung, you knew he was a pitcher.
Yeah.
But it's too confusing in the American League. Can't have a guy batting ninth with 100 RBIs like Scott Brocious did for the Yankees.
Right.
It's just weird. So the only thing I follow is the National League.
Okay. Nice. I live in the South and the Braves just won. So
look at you. I was just on 2 days ago with a guy from ATL and he couldn't help but crow about the Braves.
Well, it's been a long time. It's
been 26 years. It's like, hey, enjoy it. Yep. Yeah, that's what it's for.
So favorite place to eat in New York? That's probably a tough question.
That's a tough one because the restaurants, they come and go. Our favorite restaurant from the village is called Japonica, and it's on University Place, and they've had to downsize because their rent was stratospheric. The other place that was our favorite place, which is closed, sadly, is called Kangsu. They're in Little Korea. They're a Korean barbecue place. We were taking the kids there from the time they were little. They were in high chairs, and my oldest just turned 30, and he went there as a baby. So
Wow.
Korean
Cool.
barbecue where they cook right in the middle of the table. Great place. But sadly, the pandemic, it's tough enough in the restaurant business, but there was an article in the Times about a year ago about all the restaurants that have closed. It was in the Time magazine section, and I went through it, and it was so sad because there were dozens of places I've been to, and it's like, oh my God, that one closed. It was like really sad.
Yeah, especially when they're like attached to your history,
But
like
yeah, they're
someplace.
part of your lifestyle. Remember the time we went to, whatever, Chanterelle or the joint over on Gansford Street at 4:00 in the morning, and they're gone.
Yeah. And yeah, I don't know if there's been many industries hit harder than restaurants from the pandemic. It's just sad.
Well, they call this now the Great Resignation. So, I write actually now it's become a weekly newsletter. Actually, it's even more than that. I started something new with my FQ newsletters. I cover a lot of topics, and I've been covering the Great Resignation, as it's being called now. The fact that there are actually more jobs available than there are people seeking jobs now. Been a lot of theories about why it is. I think one of the theories is that people had an opportunity during the pandemic to take a cold, hard look at their life, and they didn't like what they saw. And they said, I don't want to work in a hospitality business, right? People have behaved pretty poorly during this pandemic. I just got to be honest.
Yeah.
Between the airlines and restaurants and masks and not masks and people getting shot and people getting punched out. Really, I mean, this started with, we're all in this together. I've been writing kind of an animal, farm themed treatise. And I think of the famous quote. I'll paraphrase the famous quote. We're all in this together, but some are more together than others.
Yeah, that is definitely true. So I have some questions related to your journey as an entrepreneur.
Sure.
So can you tell us kind of your entrepreneur journey to this point, how you got started, what inspired you to get started, and kind of, I think you've done different businesses, because you say
I've done a whole bunch of
entrepreneur, kind of how that.
Yeah, it's kind of how that works.
I know it's a lot. It'll be a lot. So maybe even just the cliff notes, if you will.
Yeah, I'm like the Dexter of entrepreneurs, and that's a terrible thing to think. But yeah, I've had a bunch of different businesses. They live for a while, and then you move on to something else. Let's see. I'll give all the touch points since it's 2021. I graduated college 1981, so it's been 40 years that I've been out in the free world. I spent 10 years. I had two jobs. I worked for a Fortune 50 company for a couple of years, and I worked for a subsidiary of the New York Stock Exchange as a programmer. And then I started my first business in 91, so that's 30 years ago. I was in the IT business. Then I started a leasing company with my business partner. I had a factoring company. I had a real estate company. I had a company that built home theaters back, 20 years ago, when that was like a super hot business. Last 10 years, I've been business coaching, taking all of my expertise as an entrepreneur, bootstrapping businesses, and sharing that with folks who are where I was 25 years ago. And then I wrote the FQ book, and I have a course around that. And I do one-on-one coaching with people for $500 a month. I will coach you in money. I'll teach you everything that's in my book and then some. And I recently just got my real estate license too. So I'm going to be diving into the real estate business, as well as, trading a portfolio of stocks that I've done for pretty much since I was 17 years old.
Nice. So which of those businesses that you had was your favorite?
The most lucrative business was the leasing business. I wouldn't say it was my favorite, but it was like printing money.
Yeah.
And then the internet, and again, this is going back to the 90s. Then the internet came around, and like it did with a lot of businesses, it just squeezed all the margin out of it. Right. There's a lot of stuff going on in again in the media about the used car business, how there's a dearth of cars available, how prices, friends of mine were saying they actually could get more than they paid for cars to sell them. I could probably sell my cars. I have 4 cars. I bought one about a year ago, a fancy Jeep, a high-end Jeep Mojave, and I could probably sell it for more than I paid for it at this point in time. But the margin's been squeezed out of that business. I like to buy used cars because it's what I call the FQ thing to do. FQ is financial intelligence. You buy a low mileage car that's maybe 2 years, 3 years old, right? All that immediate depreciation. The old saying is, the minute you drive it off the lot, it's lost 40% of its value. That's probably changed a little bit recently, but eventually it will normalize. So you don't want to take that hit. Let some other sucker take that hit. Let them drive, put the first 20,000 miles on it. And I shouldn't call them a sucker, but yeah. Having said that, I do believe that at least at one point in time in your life, you should buy a new car. There's nothing like having a car with like 3 miles and the new car smell that lasts for a long, long time. I think it's something that you should treat yourself to at least once in your life. But otherwise, if you're just grinding through vehicles, driving from here to there, it's a depreciating asset, and it depreciates mostly during its first couple of years. Yeah, so let's let somebody else do that.
I was that young sucker once. I thought I needed a new car. And I was young and I did not have the financial intelligence I do today. So my only thing would be, when you buy a new car, I don't think it should be your first car, right?
No. My first car was my first car that I bought. Well, actually, no, I take that back. The first car that I bought was an 84 Honda Accord. Beautiful car. I spent $10,200 for it. And I held it for a year and a half, and I sold it for $8,900. So it's almost like I kind of rented it. Yeah. But then the next car I bought was a rattle trap of a Rabbit convertible, because I bought it from my boss, and I always wanted a convertible. And I've owned convertibles my whole life. And it was kind of a piece of junk, but I tell you what, it was a lot of fun. Yeah. So I enjoyed
it. So what inspired you to write the FQ Financial Intelligence book?
I was at a conference 3 years ago in Bangkok, and I was sitting at a table. They do a daily mastermind group. This is for a group of location independent businesses, digital nomads. A lot of them, I've had a lot of them as clients over the years. So a whole bunch of my clients were there. So I travel halfway around the world, and they do a mastermind day. So I sat at a mastermind table with a whole group of coaches, and we talked about our Jim Collins BHAG, the big, hairy, audacious goal. And I said I wanted to write a course in financial intelligence. And everybody at the table was half my age. And they all said, well, you might want to get on that, dude, because, you ain't getting any younger. So I did. And I came back and I wrote it. And I tested it with a dozen people. And then I was about to launch when a few people said, hey, you should turn this into a book, because the book will be your lead magnet. And I thought, well, really? Am I not eating my seed corn if I put out a book? And they're like, no, people like the book. They'll want to learn it from the author. I'm like, all right. But that took me down a whole nother rabbit hole, because I'd never produced a book before. And that's something that lasts forever. So I wanted to make sure it was professional. I wanted to make sure that I had about 250 infographics. It's a big book. It's 432 pages and 250 infographics. I wanted to make sure that I had the right to publish them, because I had just grabbed most of them off the internet. And then I had to hire a guy who had to convert them into vector files so that they would print properly. It was, I could write a book on how to professionally put together a book. But now that I've done it once, it's pretty easy. And I self-published it, and it's worked out pretty well.
Nice. So what do you consider your greatest accomplishment?
When somebody asked me this, I've been asked this before on different podcasts. I always say the same thing. being married for 30, almost 31 years to the same woman, that's a pretty big accomplishment. Raising 3 kids, really, really big accomplishment. Now, that never ends, right? Sadly, marriages end. And I'm at an age now at 62 where we've seen marriages end, but kids, they're forever. So those are, in my personal context, there's no, nothing really holds a candle to that, other than the fact that maybe my golf game, I'm getting close to a single digit handicap. So that's a pretty good accomplishment. But from a business context, I think my biggest superpower is the ability to recognize when a business has kind of run its course and then pivoting to something new, and not falling into the situation that I've seen with friends and with clients of what I refer to affectionately as managing decline. I had a friend who managed the declination of his family-owned business for 25 years. I mean, it's soul crushing. You don't want to do that. You really don't. But he was kind of in a situation that he just couldn't figure out a way to get out of. And I worked with him, informally on coming up with strategies to transition out. And it took forever. Family businesses are tough. So for your listeners who are involved in family businesses, yeah, I feel your pain. Having business partners is tough. I like being a solo act, even though I have to be chief cook and bottle washer, and I have my strong suits and I have my weak suits, my Achilles heel. It would be really nice to have a partner who could, make up for my shortcomings. That's key. But then you have to ask yourself, what are the unintended consequences of having a partner or a co-founder? Changes the dynamic. So you've got to balance the pluses and minuses of that to determine the best strategy.
So if I could kind of touch on something that you said earlier in what
Sure.
you're saying, do you feel like a lot of business owners get too emotionally attached to the business?
100%. Yeah.
And that's maybe why they go on that declining slope and they just ride it out, because they're too invested emotionally in it. Probably
they are. I've done this myself, and I've said what I'm about to say numerous times. But a lot of entrepreneurs, all they succeed in doing is creating a job for themselves that they can't quit. Right? You work for somebody else at will. You can say, I'm out of here. I did it. I worked for a big brokerage firm. When I left the New York Stock Exchange, I lasted 10 weeks. Couldn't stand it. There's an old saying, hire slowly, fire quickly. Well, that applies to you as well as the employer. And I fired myself after 10 weeks. They were positively gobsmacked that I would walk away. But I said, I made a mistake. This is not the place for me. And I left. And that's tough. I preach to owners that they want to obsolete themselves, right? There's all sorts of stuff written by, Michael Gerber and all sorts of other guys out there about how you need to work on your business, not in your business, but ultimately your business needs to work for you and you don't work for it anymore. You just cash the checks, right? That's kind of the holy grail. Well, to some people, no, that ain't. That is not the holy grail. They just want to die with their boots on. They built a job for themselves. They're masters of their own domain, and they want to run it forever. And what they fail to recognize is when it ain't working anymore, or worse than that, when they should step aside, right? Look at something like Facebook. I've been writing a lot about Facebook, and I own Facebook stock. And they've done tremendously well, and they are a money machine. But you look at the guy at the top, and honestly, he's not the right guy. He's not the right guy to be leading this company. I know they changed it to the meta and the metaverse, and the whole thing just seems like a play toy, right? We're going to build this virtual world, and you're going to wear these goggles. And again, I'm sounding like an old school boomer when I talk about this, but it's like, I don't want to play virtual golf with goggles on my head. I want to go out and play real golf. As bad as it is for the environment, I want to be able to touch the earth and be out in the world. We're social creatures. So creating this avatar For me, I don't get it. I'll be the first to admit I don't get it. And anytime I haven't gotten anything, and I thought I was the idiot, like in the dot bomb of 2000, where money was getting shoveled into companies and we were funding them with our leasing company. And I remember telling my wife after going to a investor pitch, we're looking for money from me, 50 grand, 100 grand. And I came back home to my wife and I said, I'm a dinosaur. I just don't understand this. I feel so foolish. And then a year later, the whole thing collapsed. And I'm like, oh, maybe I wasn't as big an idiot as I thought I was.
Wow. Thank you for sharing your story with us and your perspective on these things. I have a few questions as far as ways that you can maybe give some advice to some of our entrepreneur audience. Sure. What do you feel the biggest money trap entrepreneurs fall into? And you might have already spoke on this a little bit.
Not having enough. I don't know. You said it, so I gave it to you. First of all, I follow the gestalt of sharing my experience as opposed to giving advice. Advice is a win-win for the person you're giving advice to, because if it works out, they're a big shot, and if it doesn't work out, I'm the asshole, right? So I try not to do that. I try to share my experience. So in my experience, there's a bunch of things. Number one is if you're bootstrapping or starting a company, you can never have too much money to start. Get credit lines, even if you have to personally guarantee them. Turn over rocks, figure out where you're going to have money. Because you want to grow your business, you're going to need money. And sometimes a growth spurt where your cash flow gets diminished can be just as detrimental to a business as not having enough business. So that's number one. Number two, assess risk. When you're starting early on, you just want to book deals. You're not really looking at margin. You're looking at top line. I want deals. I want deals. I want deals. I want to get the sense of motion. So we famously did a deal. It was the biggest deal we had ever done in the early 90s with $1 billion company, $50,000 worth of Macs. We were selling Mac computers. And 2 weeks later, they went bankrupt. Multi-billion-dollar company. Ooh. And that was like getting kicked in the stomach. So assess risk. Sometimes no business is better than bad business. To that point, be careful who you extend credit to. Do not be afraid to tell people, I need a credit card up front, or I need a 50% deposit. I've heard entrepreneurs say, no, I don't want to do that. That's going to scare them off. It's like, good, right? Yeah. Scare them off. Really? Not that high a bar. They're going to have to pay you anyway. Don't turn yourself into an interest-free bank, right? Put on your invoices 1.5%, charge for late bills. No one will ever pay it, but if you've ever had to sue somebody, and I've sued many a person. I'm really good at it. I'm not a lawyer. I go to small claims, but I ask for interest. And I'd say 3 out of 4 times I've gotten it. I'm not necessarily entitled to it, but they've given it to me. And the only reason I can legally do it is because it says that on my invoice, right? 18% a year, 1.5% per month if you're late. At that point, hey, your relationship with them is probably already lost if somebody owes you money for a long period of time. And I guess probably the last little point that I'll make is something that I call you can't wear the gray hat. So what does that mean? If you're an early stage business and you're out there selling, everything's kumbaya. Every answer to every question a client asks you is yes. Yes, we do that. Yes, we do that. Right? You do that. But then you turn around and you made the mistake of giving them generous terms because you wanted their business and didn't want to scare them off. And now they owe you money and you're out 90 days. And now you got to pick up the phone and call them and wear the black hat to say, hey, you owe me money. Well, there's no such thing as a gray hat. You're going to have to pick one. Right. But it is one of the positives for having a business partnership is you can play good cop, bad cop. It's very hard to play good cop, bad cop when you're the only cop.
Yeah. You start to seem like you have a split personality.
Well, I actually wrote that I have a screenplay about these dysfunctional cops, and the guy says you can't play good cop, bad cop if you're the only cop, unless the client's name is Sybil. Right. And you have to understand the relation. You have to have read the book or know of the book Sybil about a woman with split personalities.
Nice.
So anyway.
I want to go back into that a little bit from what you said in the beginning is what you alluded to is having a lot of money up front to start the business, right?
Sure.
And that kind of goes against a lot of the mentality of bootstrapping a business. So can you kind of counter those points why it's not a good idea to bootstrap? Or
no, I think a bootstrap is a very good idea. You can, I tell people, look, get as much, I'm making air quotes when I do this, free help as you can without being predatory. And I know plenty of people who've done it. I know I've become a victim of, the free predator in the past, where I've offered, pro bono coaching services to people and regretted it because I found out that they were kind of using me. So I, tread carefully, but look, if you can trade SEO services with a friend for something that they need, go ahead and do that, right? If you can barter and do non-monetary things, that's great. Try to secure a credit line before you need it, not when you need it. When you need it will be too late. You need to get it, even if you're just going to tuck it in your pocket, even if it costs you a couple bucks to keep it open, right? You need to have it in your hip pocket, right? Managing the money, managing the margins, managing the cash flow. Those are the things that you need to do. There's an old saying that in order to run any sort of business, you only have to master two things. And I just mentioned them: margins and cash flow, right? If you can do that, whether you're selling pencil erasers or 747s, if you can manage those two things, you can have a viable business.
Yep. That's what I'm all about in my business is cash flow.
Yeah. If you can't manage those things, you're going to constantly be fighting that battle. You just are. The other mistake that I see over and over again is people try to get cute and say, you know what? I'm just going to trade equity for their talents, right? I'll just give them a piece of equity. And it's like the producers, I keep giving away 100% of the proceeds for Springtime to Hitler. And then it becomes a hit. And all of a sudden, clearly there's not enough money to pay 5,000% of investors. You want to bank on success, not failure. And equity is the most expensive way to fund a business. It just is. So exhaust the debt markets before you even consider equity. There's a time and a place for equity, but it's not day one. In most cases, it's just not day one. And in most cases, you won't get money day one if you went out into the world anyway, because they're gonna throw the T word at you. I want to see some traction, and then I'll consider investing some money, right? That's good. All right. So go out and bootstrap and show some traction.
Now I want to ask you about some current trends as a financial coach.
Sure.
So what are your thoughts on NFTs and cryptocurrencies, and where do you see those markets going?
NFTs, I don't understand. I've written about that too. I mean, you're creating a non-fungible token. If I want to be quite literal, the word fungible means to perform. So you're talking about a non-performing asset. I don't want any non-performing assets. But if something is an NFT, it's a digital serialized serial number one of some item, right? But there are no barriers to creating indistinguishable copies of that, even though they're not technically serial number one. I can't quite figure that out. I have baseball cards, right? I'm not sitting at that desk. I'm sitting at a different desk. But if I were sitting at my other desk with my PC, you would see them behind me. I'm a Roberto Clemente fan, right? National League. I'm a baseball fan, and I have every one of his cards from 55 to 73 when he was a player. And the first one is it's an authentic card. I sent it out. I had it slabbed. I had it graded. It's probably worth $4,000 with the way that the market is now. Not worth that. If I wanted to try to make a market in it, I could probably get a few $1,000 if I needed to. It's not one of one. It's one of probably hundreds that are out there, but there is a finite number. There's a certain rarity to it. even if there are hundreds. But an NFT, you're trying to conjure rareness where there isn't any because it's digital. And a digital copy is an absolute Dolly the sheep clone where you can't clone what I have. They were created and it's like artwork. It's, a Basquiat, I was writing about it. It traded for 40 million. Well, it's one of one. I'm not going to justify whether it's worth 40 million. As my dad used to say, it's worth what somebody will pay for it. If someone will pay 40 million, that's what it's worth. As far as crypto goes, there's a lot of FOMO. I'm a trader and I take a certain amount of solace in the fact that the American exchanges are open for basically, 32 and a half hours per week out of 168. So basically they're open about 20% of the time. So when the market closes at 4, sure, there's after hours trading for the big boys, but for the most part, it's kind of done for the day. And there'll be some pre-market trading. But at 8 o'clock in the evening, I can kind of rest assured that my stock is not going to move appreciably in price unless there's some black swan event that occurred that night. And those happen, but they're rare. But crypto runs 168 hours a week. It stops for nothing. And I don't want to wake up and find out that my investments lost 10 grand. Now there are facilities you can put in place. For a long time, you couldn't short the crypto market until they started, the futures market and that. But it was pretty difficult to hedge. I run a mastermind, what we call a passive investing mastermind, although sort of a misnomer because there are very few passive investments in this world. Everything needs to be managed. And one of my guys who's big on crypto and has a lot of crypto and has been thoroughly involved in that market. He thinks of it like gold. It's a store of value. And the store of value for gold is very intrinsic. I mean, gold has value because you can use it for things, right? You can make jewelry out of it. You can use it in electronics. I mean, it has very, very real world purposes. Doesn't tarnish, and there's a finite amount of it. Bitcoin, there's a finite amount. I mean, there's 20 million coins or something like that, and there's only a fraction of them left that haven't been mined. There's a finite amount. So he looks at it that way, that it's just a safe store of value. But the difference is that where gold has intrinsic value, crypto has extrinsic value, and that extrinsic value is only that people will accept it as a quasi-legal tender. But ultimately, if you want to spend it, probably 9 times out of 10 or 99 times out of 100, you're going to have to convert it into a fungible currency, into a fiat currency, whatever that might be, dollars, euros.
Yeah, what I have seen though is that a lot of businesses are starting to take cryptocurrency as payment.
Correct, and that as that becomes more commonplace, then it has some prospects. If it becomes less of a quasi fiat currency and actually becomes tradable, right, where you can have it on your phone and go buy a pack of gum with 0.0001 Bitcoin or whatever it might be, that's a different ballgame. Now, the whole other side of it is the regulatory and the taxation related elements, which are still, I believe, a moving target. They just are. And governments could, with the stroke of a pen, simply outlaw it. Right? It's not that difficult to imagine them coming in and saying, and unless you play by our rules, we're going to make it so difficult for you guys to transact business. Because you got to remember, it was the anonymity and opacity of it that made it so appealing, and made it very appealing in the netherworld, right? When they do a ransomware attack, they don't ask you for gold coins or dollars or euros or yuan. They ask you for Bitcoin. Why? Because it's extremely difficult to trace it back to its origin. That's incredibly frightening to a government, which is actually trying to remove paper currency.
Mhm.
Right? Only about 15% of transactions that are done in the US are done with paper currency these days. And that number is eroding and eroding and eroding because they want to be able to track transactions, right? For tax purposes. There was just something recent that was proposed. I think it was ultimately killed, but this idea that banks were going to have to report all bank like transactions on your individual bank account. Right. Right now, you track capital gains. They didn't used to do that. You were on your honor to give the cost basis. Well, probably 10 years ago, they said, no, all you brokerage firms, TD, Schwab, Fidelity, you now have to report all the transactions in your client's account so we can match that up against their tax returns for capital gains.
Wow.
Right? Used to be on your honor for that.
Yeah.
That
Leaving
is,
no stone unturned.
That's Big Brother. But, I've been writing about Orwell. That is really Big Brother. If they're going to basically look at your personal bank accounts and then match that cash flow up against your tax return and say, hey, we're going to write an algo that's going to tell me whether those things are out of whack. That's a little Big Brother. I think it's a lot Big Brother, actually. And I tend to be, I'm from a social standpoint, I'm as bad as liberal as you can get. I lived in Greenwich Village for 30 years. You don't survive there unless you're like an ultra liberal. But from a fiscal standpoint, I consider myself quite fiscally conservative. I don't believe that you can borrow your way to prosperity.
Right. Awesome.
And we are awash in debt.
As you know. Yep. Yeah. The United States government thinks they can borrow their way to prosperity.
Well, remember, about 80 to 90% of that is owed to ourselves, but it's still borrowed money.
Yeah.
Right. $30 trillion of borrowed money. Right. It's a lot of money.
Well, Henry,
I hope I answered your question about the crypto. I don't own any. I have clients who own it. I have my 30-year-old son says, all my friends told me 10 years ago I should have bought it. I wish I had bought it when it was like 14 cents. I'd be like a gazillionaire. I'm like, there's no way you would have held it for very long. Right.
One thing that I want to touch on that too is being an older person myself. I'm 47. And is it sometimes that you need to look at what the upcoming generation is getting into and investing in and buying rather than our mindsets of the ways that we invested?
But you also need to invest in things that you're comfortable with. Right. Like some of the folks that I'm working with one-on-one are much more interested in real estate than stocks. Stocks kind of scare them. Right. And I've been trading stocks since I was 17. I bought my first stock in 1977 or 76, Chrysler. Right. It was the first stock. I was in high school. I had $3,000 that I'd saved up and I traded it and I made money. So I'm accustomed to that. But imagine, and I learned to ski when I was 4 years old, right? So I've been skiing for almost 6 decades. But imagine if you took a 62-year-old out on the mountain who's never skied before. It'd be pretty friggin' terrifying. I got to tell you. Anything off the bunny slope, even the bunny slope, I think would be pretty terrifying. So it's kind of analogous. If you have not invested in the markets or crypto or whatever, and it's really unknown, or real estate, whatever it might be, if it's totally unknown to you, it can be terrifying and paralyzing. Right. One of my goals is to get people used to how these instruments work, understand the risks involved, and understand that, you can lose money. That's okay. Right. It's okay. It's going to happen. Even the best traders ever, even Warren Buffett himself said, his company's called Berkshire Hathaway, which was his textile company that he bought. And he never could get Berkshire Hathaway to work. That original company. He said it was his biggest failure.
Wow.
Very first company. Now, it's interesting that his company's named for that. He's had zillions of successes afterwards, but he still kind of will mention the fact that he had that failure. Those will tend to stick with you. That's okay. Understanding that takes some time.
So I think one lesson from this is not to go into investing uneducated in anything. Understand what you're investing in before jumping in.
Yeah, exactly. Well, crypto's just like that. Everybody has FOMO. They see
Yeah.
it. They see their buddies. They see these, these billionaires who were minted and they're 23 years old and they're living la vida loca. Yeah, for every one of those, there were tens of thousands that went in unprepared, got their lunch taken from them, and never went back.
Mm-hmm. So on that note, how would someone reach out that wants to expand their financial education or financial literacy? How would they reach out to you? Because I know you can help them with that. And also, where can they pick up your book at?
So if you go to Henry Daas, HenryDaas.com, which is my vanity site, it has links to all my different sites. Right there on the homepage is a link to take you to BookBaby, and you can just download it for free. I give the book away.
Nice.
You can buy it on Amazon if you want, and people do, but yeah, I give it away for free because I want people to read it. And then you can go to my site, either DAS Knowledge or DAS FQ, DAAS Knowledge. Actually, I have DASS because people misspell my name all the time. So I have a redirect there. But if you go to DASFQ or DASKnowledge.com, that's my business only site. You can also download the book for free there. You can take my money quiz. If you're an entrepreneur, there's a bunch of PDFs that I give away. 5 reasons small businesses fail, things like that, or 10 things to ask when hiring a business coach. I give away a lot of free resources. I have like I said, I have a newsletter that I give away. I don't pitch people in the newsletter. Right. It's purely informational. Yeah, I'm big on educating people so that they have confidence to make good decisions. And when they make bad decisions, they understand where they went wrong and they adjust.
Nice. And we'll put those links below the video here and in the show notes for the podcast. So
yeah, no worries.
I highly encourage all our listeners to at least go check out his site and download the book. I'm sure you'll get a lot of great information that will help you in your financial future. So thank you again, Henry.